Crypto market bleeds as Trump's trade war returns. How bad can this get? The crypto market is in turmoil as Trump's trade war escalates. Bitcoin, Ethereum, and altcoins are all plunging as new tariffs shake up global markets. Is this just the beginning of a bigger meltdown, or is a recovery around the corner? We break it all down in today's episode, available now on YouTube and Spotify. Trump doubles down on tariffs. A crypto chain reaction? The financial markets are in chaos after former US President Donald Trump announced aggressive new tariffs. His latest economic moves include an additional 10% tax on Chinese goods, on top of existing levies, plus a looming 25% duty on imports from Canada and Mexico. Investors across all markets reacted immediately, pulling capital out of risk assets like stocks and crypto. And the damage is already showing. The total crypto market cap has fallen over 8% in just 24 hours, now sitting at $2.6 trillion, a steep drop from its $3.7 trillion peak in December. Bitcoin, which had been holding above $80,000, plunged to a low of $78,200, marking one of its biggest single-day losses in months. Ethereum followed suit, crashing nearly 10% to $2,100 and with fears that this could go even lower. This is eerily similar to what we saw in early February, when tariff fears triggered a wave of sell-offs. However, back then, diplomatic talks eased concerns and paused the panic. Now, with tensions rising and Trump calling out Canada and Mexico for failing to meet trade demands, that safety window may be closing fast. How tariffs could send Bitcoin. Even lower trade wars don't just affect traditional markets. They send shockwaves through crypto as well. Why? Because tariffs cause inflation, forcing the Federal Reserve to adjust interest rate policies. Right now, the US inflation rate is above 2.5%, already exceeding the Fed's 2% target. If these new tariffs kick in, inflation could spike further, making it harder for the Fed to cut interest rates as planned. And that's bad news for crypto. Over the past 2 years, Bitcoin has behaved more like a risk asset, trading in close correlation with the Nasdaq 100 and S&P 500. If stocks fall due to rising inflation and tighter liquidity, history suggests that Bitcoin will drop right alongside them. But this goes deeper than just price correlation. Investors flock to safe haven assets during uncertain times. We've already seen capital move into the US dollar and gold, leaving riskier assets like crypto behind. February's flash crash wiped out nearly $760 billion in just 60 hours. If these tariffs spark another economic panic, Bitcoin could be staring down an even bigger correction. How are investors reacting? Retail versus institutional. The Bitcoin market is divided right now. On one side, retail traders are panic selling, dumping their holdings as they see prices falling. On the other hand, institutional investors are slowing down their ETF purchases, signaling caution about the future. Since Trump's election victory, Bitcoin ETFs have seen record-breaking inflows, with $2 billion entering the market in just 48 hours. But in the last 8 trading days, we've seen the opposite. $3 billion in outflows, including $1 billion on a single day, February 25, marking the highest ever single-day withdrawal. This shift suggests that major players are waiting to see what happens next. If the Fed delays rate cuts and tariffs drive inflation higher, we could see even bigger ETF outflows, pushing Bitcoin prices further downward. And if institutional investors start offloading their positions, it could trigger another wave of volatility. Where does crypto go from here? Right now, Bitcoin is in no man's land, down 26% from its all-time high, with no clear direction. Analysts are split on what happens next. Some, like Arthur Hayes, believe Bitcoin could drop below $80,000 before stabilizing. Others, like Julien Bittel, see macro conditions improving, hinting that the market might be close to bottoming out. Bearish outlook. 1. If tariffs fuel more inflation, Bitcoin could drop to the $69,000 range, a key support level. 2. If ETF outflows increase, we could see a repeat of February's sharp correction. 3. If stocks keep falling, Bitcoin could follow the traditional market sell-off trend. Bullish outlook. 1. If tariff fears ease, markets could rally back quickly. 2. If institutional investors return, Bitcoin could recover back toward $93,000. 3. If macro conditions stabilize, we could see another long-term uptrend. One thing's for sure, volatility isn't going away anytime soon. This is why it's more important than ever to stay informed and be ready for the next big move. Final thoughts. What should you do? The crypto market is at a turning point, and Trump's trade war could be the deciding factor in where Bitcoin heads next. Whether you're bullish or bearish, now is the time to pay attention to macroeconomic trends and prepare for possible market swings. Want more in-depth analysis? Listen to the full breakdown on Spotify. Link in the description. What do you think? Will Bitcoin crash further, or is this just a temporary dip? Drop your thoughts in the comments. And if you found this breakdown valuable, Like, subscribe, and turn on notifications for real-time updates on the crypto markets.